The Q2 FY25 result season is almost over. You may already have some idea about the aggregate results from the newspaper and media reports. But amid this quick day-to-day reporting based on the evolving picture, it's easy to miss the finer details. But worry not. Now that the dust has settled, we will take a comprehensive look at Q2 results to tell you which sectors and stocks you should keep on your radar. Hello and welcome to ET Money's YouTube channel. In this video, we will discuss the winners and losers of Q2, looking at both sectors and stocks. So if you are a stock investor, the insights in this video will be quite helpful. But for that, do watch this video till the end. Now, before I start, an important update. We recently launched the stock discovery feature on the ET Money app. With just one tap, you can know every detail about a stock and its underlying business, plus a lot more. So do check it out. Okay, so let's start with the first part of this video, sectors that did well and poorly in Q2. On your screen is the performance of the key sectors in Q2 FY25. Now, three sectors that stand out based on the data are capital goods, consumer durables, and telecom. These three sectors have witnessed healthy revenue and profit growth and margin expansion too. But what's responsible for this good performance? Well, the capital goods sector has been a key beneficiary of the government and private capex. As per CRISIL, the sector-wide revenue growth could be 9 to 11% in FY25, led by significant outlays towards railways, defense, conventional and renewable sectors. Bharat Electronics, Keynes Technology, Mazagon Dock Shipbuilders and Thermax were the top performers in the BSE Capital Goods Index. These companies reported double-digit revenue and profit growth and expanded margins by more than 100 basis points. Next comes the consumer durable sector. The factors that seem to have worked in the favor include higher demand amid scorching summer season, an improvement in rural demand, and declining input costs. Voltas was the outlier in the sector. The company's revenue and profit grew by 15% and 140% year-on-year respectively, and its margin expanded by over 400 basis points year-on-year. The third outlier is the telecom sector. The sector benefited from higher investments toward 5G infrastructure and the tariff hike by all telcos. Now, the companies that stood out in this sector include three lesser-known names: Optimius Infracom, Suyog Telematics, and Tejas Networks. Optimius manufactures, distributes, and sells mobile brands and other telecom products. Suyog is a telecom tower company. Tejas is a networking products and services company. Now, the sector that disappointed the most in Q2 was oil and gas. The revenue growth in oil and gas sector was flat. Profits contracted by a massive 46% and the median sector operating margin contracted by 83 basis points. The sector's weak performance can be attributed to the oil marketing companies' low refining margins, inventory, and LPG losses. The sector's worst performers include the heavyweights Reliance Industries, Indian Oil, and BPCL. Indian Oil slipped into losses in Q2. BPCL saw its PAT fall by 79%. However, one company that succeeded in bucking the trend was GAIL. GAIL had double-digit profit growth and its margin expanded too. However, its revenue growth was flattish. So this was the sectoral perspective on Q2 results. Let's now talk about stock-specific perspective. Let's take the BSE 500 group of stocks to pick the winners and losers of Q2. The BSE 500 is a comprehensive index that includes large, mid, and small caps, so it can give you stocks from all market cap buckets. Now, the table on your screen summarizes the results we got when we applied the certain revenue and profit growth and margin change criteria. There were 179 companies whose quarterly revenues and profits grew year-on-year and the margins expanded too. Against them, there were 52 companies whose quarterly revenues and profits contracted and the margin shrunk as well. 89 companies were able to grow their revenues and profits by 10% or more while also expanding their margin by a decent 100 basis points. However, 20 companies suffered revenue and profit contraction of 10% or more and their margin shrank by 100 basis points or more. Finally, 36 companies witnessed explosive growth of 20% or more in their quarterly revenues and profits year-on-year. These companies also managed to raise their margins by 200 basis points or more. Against them, there were 5 worst performers whose revenues and profits contracted by at least 20% and the margin squeezed by at least 200 basis points. So from an investor's point, the companies at the extremes are the ones to keep an eye on. Let's first look at the 20 companies which suffered significant contraction in Q2. These are the losers of Q2. Now, quite a few cement companies appear in the list, including Shree Cements, Ramco Cement, Nuvoco Vistas, JK Lakshmi Cement, and Birla Corporation. Cement companies were hit in Q2 due to reducing demand owing to elections in the previous quarter. Also, Q2 trends to be a seasonally weak quarter for cement makers due to the monsoon season in the country. Then JSW Steel, SAIL, and Ratnamani Metals suffered due to low steel prices thanks to cheap imports from China, North Korea, and Vietnam. Chennai Petroleum suffered due to an industry-wide fall in refining margins. GMM Pfaudler blamed a slowdown in investments within the chemical and pharma sectors for its dull numbers. So, a variety of company-specific and sector-specific reasons were responsible for the poor performance by these companies. Next, let's look at the 36 companies whose revenue and profit grew by 20% or more year on year, and their margins also expanded by 200 basis points or more. These are the winners of Q2. So what has worked in favor of these companies? Asset management companies SDFC, Nippon, Aditya Birla, and UTI gained big due to the rising equity participation by Indian investors and a raging bull run that saw the markets rise to new highs. The mutual fund registrar CAMS also profited from the wider acceptance of mutual funds as an investment tool, especially amid a rising market. Brokers ICICI Securities and Nuvama also enjoyed the equity rush tailwinds. Zomato has been on a turnaround path, and this quarter has further strengthened the case for the company. Divi's Labs reported strong growth in its custom synthesis business and also benefited from forex gains. A demand revival helped Indian hotels post a 259% rise in profit year on year amid a margin expansion of about 300 basis points. IDBI Bank benefited from higher net interest margin and non-interest income. So, these were the winners and losers of Q2. You can download the list of winners and losers of Q2 from the link in the description. But how should you use this data? Well, if you're looking to pick stocks, the latest results can be a good starting point. That's because the sectors and companies that have done well are already in positive momentum. So investing in them can be quite rewarding. As far as poorly performing companies are concerned, you may want to simply avoid them or look for turnaround or contrarian opportunities within them. However, do note that none of the companies mentioned in this video are our recommendations. So no matter what your investment approach, research properly and keep valuations in mind. And with this, we have come to the end of this video. I hope you found the information useful. And if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.